Hello everyone, Mehdi Photocure for mine. I'm an AI and finance professional and global investor from Japan for over a decade now, and on this channel we have one mission: to cut through the noise and find alpha in both life and markets. And so today I wanted to actually share with you a little bit of my experience over the last 10 years. So, well, I've been able to invest in the Japanese market, the Chinese market, and the US markets, and actually also the European markets over the last 10 years. And I wanted to share a bit with you my experience about investing and how you can actually also try to avoid the same mistake that I've made along these years. So basically, to just recap a little bit of my journey. So I've started, as a lot of people, with very speculative stuff. So basically FX, lot of I would say technical trading. So this has been very short endeavors, because I realized very quickly that it was not going to work alongside I would say a pure or a real investment strategy. So what you need to realize is that buying and selling stocks is basically trying to invest your money. So basically trying to grow your money. I think that everybody understands that. But when it comes to really building a portfolio and understanding what you are really doing by putting your money into those stocks, I think that it takes time to actually be comfortable with your own style. Because what I've learned along the years is that there are a lot of different styles of investing. So we can take just like the main macro, I would say, styles that we can see on the market, like dividend investing, growth investing, swing trade, long-term trades. But I think that one of the key things is that basically what you need to actually keep in mind is that you have to have a long-term focus. Definitely, even though you are like swing trading, meaning that you are selling and buying stocks over a shorter period of time, like 2 or 3 months, trying to take advantage of some dislocation in prices, you are going to invest for the long term, meaning that you have to stay in the game for many years. And so staying in the game, what does it mean? It means that you cannot blow up your account. And what does it mean? It means like you cannot bet everything you have onto one single idea. I think that's one of the key learnings that I've had in those past 10 years. And I've made the mistake myself, like to be overconfident or to be maybe over-aggressive. In a sense, concentrating over one or even two single ideas. I think this is a very bad, this is not even a strategy, but this is a very bad thing to do. Why? Because like the market is always going to humble you, and I think that's also a key learning. You are not smarter than the market. You are not bigger than the market, and I think every investor at some point has been humbled in some ways, and that's really how you grow as an investor, meaning that you learn your lessons. And I think also one key learning that I've had is that there are lessons that need to be experienced. You cannot learn through books, basically. So I think the biggest lesson that everybody has to experience is losing one's own money, and losing it significantly, in a sense that you have to feel the pain of losing money. And I think that without that, you cannot really grow as an investor. It doesn't mean that you need to actually lose like 6, 7, or 8 figures, but the fact that you have to take accountability for your decisions, and that at some point you may be wrong, because you cannot be right all the time. And so that's why I come back to the idea of not concentrating onto one single idea. You have to diversify to some extent. We can call a portfolio of 10 ideas concentrated. I think that 50 ideas may be too much, but I think that 10 to 20 ideas, if you run a stock portfolio by yourself, I think is very good. But never over-concentrated, because you may be wrong, and when you're wrong, it's very hard to actually come back on a financial basis, but also on a mental basis, because it's kind of like war, I think, this kind of investing game, because sometimes you lose, sometimes you win, but sometimes you lose so much that it's very difficult to come back. Well, having said that, so let's come back to like the strategies. So as I said, like there are multiple strategies. Some people prefer dividend investing, some people prefer growth investing, value investing. So what does it mean? It means that actually everybody has the same objectives, makes money. But there are different ways to do it and different ways to approach basically the fact that the market is not recognizing opportunities, and that what is priced today in the market is going to be different tomorrow. And so that's why, as an investor, you have to recognize all of this, and you have to recognize this opportunity. And so this dislocation in price, so basically meaning that the price you are seeing today in the market does not reflect all the upside that you will see in the future. So with the stock. And so what I've learned is that you can make money in a lot of different ways. You don't need to actually be specialized in only one way. But the reality is that some ways actually fit better your own personality. Sometimes you are a bit more aggressive, so you may prefer growth stocks, or you may have maybe more specialization or more knowledge in some industries that are growing. You can also go into value stocks if you are more conservative and you are more able to recognize that there are dislocation in terms of financial value. So like in the financials, basically income statement, balance sheet, and cash flow statements, if we can say it like this. And you can also play it safe, like just compounding with like dividend stocks, even though I think that this strategy is a bit more defensive, but much more likely, I think, that to succeed in the long term. So this strategy, and what I've learned, is that you have to adjust to your own personality and to your own goal. There is no like one-fit-all strategy for like everybody. So that's why you need to learn, you need to try to invest, and you need to actually adapt your own strategy to your own personality and your own conditions, because so you will see also that your strategy is going to evolve with your age, and the fact that your portfolio is going to grow bigger. Why? Because well, you cannot take the same amount of risk when you have like $10,000 and when you have $1 million, for example. I think as close as you arrive to your objectives, you might be a bit more conservative. You might actually try to have a little bit more, I would say, a safer approach, and take a little bit fewer risk and only go for much sure opportunities, I would say. And so basically, like, it all comes back to the same idea. So adapt your strategy. Another, I would say, key learnings that I had like in those 10 years, so investing, is that you are going to make a lot of mistakes along the way, obviously, and you are going to learn a lot of things. And so the way to actually become a better investor is to actually invest. Definitely invest and learn more about stocks, and just listen to a lot of different actually people. Now, what you should not be fall victim of is that trying to fall into a school of thought. I think that, and this is what we are seeing on YouTube and actually in the investing communities, that so you start with some ideas which are very actually close-minded in a way. I don't want to actually mention any community, but with investing there are a lot of fanaticism in a sense, because it's a very mental heavy, I would say, endeavor. So it will take a toll on you if you start to actually buy individual stock. Having said that, so the other way to invest your own money is to be a little bit more passive. So that's why we also have to contrast passive investing and active investing. So what I've learned in the past 10 years is that I think you need a little bit of both. For some people, you may need to have 100% as a passive investor if you don't really want to actually get into too much selecting your own securities. But I think that if you're on this channel, it means that you want to take charge of your own destiny and your own investing journey. So I most likely assume that you're going to select your own stocks. And so that's why I'm going to actually focus on stock picking. So as you're going to grow as an investor and as you're going to actually select the type of securities you want to invest in, you will have to think about it as a portfolio. So it means that you will have to consider the different stocks that you are picking, the different stocks that you are buying. And when I say stock, it can be bonds, it can be REITs, but the different securities, I will say, are how they are playing together. So, and that's where diversification comes into play, because not every financial instrument actually moves in the same way, meaning that they are not always all correlated. And that's very important. That's very important both financially, and that's important also mentally, because seeing your portfolio like decrease by 30, 50% is very hard mentally to assume. And that's why you need also like to have some counterbalance in your portfolio. And so that's why a lot of people, they are building portfolios, having so security in different basically asset classes, so meaning like stocks, bonds, REITs, for example, or even like alternative assets like, I don't know, like gold, Bitcoin, etc. But if we come back to actually stocks, also what you have to do is to have stocks in different industries, or actually stocks that actually behave differently. So that's the point. Because for example, if you only have stock in a specific industry, then you will be actually kind of reliant on the fact that this industry is going to perform well in terms of stock market, because it can perform well, I would say, in the economy, but if in the stock market it has been overvalued in the past, for example, and now there is kind of a downturn on all the stocks in the industry, then and it will be very difficult for your portfolio. So basically the idea and what I've learned is that we need to find ideas in a lot of different places. So that's one thing. The second thing is that you don't need to have 100 ideas, okay? So you can limit yourself to 10, 20 ideas. I think that's a good way to approach a portfolio building. So what does it mean? So 10 ideas mean around 10% per position. 20 ideas mean 5% per position. I think that between 5 and 10% is actually a good sizing for your position. Sorry, and so you will learn to adapt. Some positions where you have more convictions are going to be bigger, but some positions are going to be smaller as you build them. I think also, like, as you build your portfolio, a very important thing is that you actually hold it through actually a longer period of time. So the way I think that most investors approach this is that as long as the thesis that they come up with doesn't change, they will keep the position in the portfolio unless they find a better idea. And so how do you find ideas? So that's also another thing about portfolio building. So you find ideas by developing thesis. So meaning that you actually have a divergent view with the market, meaning that you think that something is going to happen, but the market is pricing a different thing. So that's a thesis, and you have to have in your mind, and you have to have, based on your knowledge and the fact that you are seeing in the data, a different story that is going to develop, I would say, a long time. And so that's how you first make an hypothesis and you see it develop. And normally, if everything goes well, it would be reflected in the stock price as you are proven correct and the old assumption of the market is proven wrong. So that's how you develop with an idea. And the way you actually translate this idea is to buy the stock at a much lower price than what you think is going to be in the next few years. So I think that's a rough patch of a lot of things that I've learned over my 10 years investing. So from Tokyo, we will continue this type of series if you like it. As well, if you also like all the contents about Japan, China, and the US market, so feel free to subscribe to my channel and check my other videos. And we see you in another one. Bye.